first of the month, and it is, of course, non-farm payroll day, US jobs data, and fascinating reading it makes ahead of Tuesday's presidential election. Jobs growth in the United States has slowed sharply, possibly down to hurricanes and strikes, with employers adding just 12,000 jobs last month. That is much lower than the 223,000 created in September. On the plus side, unemployment is steady at 4.1%. So, Nick, what did you and what did markets make of these figures today?
Yeah, Johnny, as you mentioned, kind of a almost a comical number, 12,000 jobs in an economy that is made up of 300 plus million people. So, very, very low numbers. There's going to be all sorts of mixed responses to this because some people are going to quote the hurricane. Other people are going to point out that, last month's numbers were actually quite strong. So maybe there was, there's take it with a grain of salt. But again, we were already forecasting just 106K jobs, largely because of the pause, perhaps that was done in hiring due to the hurricane. That being said, specifically just a note on that, Florida is a very large, contributor to the U.S. economy overall. So kind of taking a month off, if you will, from a lot of business activity certainly can have a pretty substantial impact on the overall jobs kind of category, as we clearly see here. That being said, why isn't the market having a bigger reaction? I think that's probably the number one reason or number one question a lot of traders, investors are looking at. Take a look at the dollar. It actually was down initially and then has completely captured its losses here. Stock market is higher today. You've got some rates here on the interest rate yields. They're actually going up today. So a bit of a confusing day on the surface, but we could look at a couple other things that maybe supported a little bit of a mixed viewpoint, which is the unemployment rate did stay in line at 4.1%. We did not see unemployment rate tick higher. This is off of its highs. I think we got up to 4.3%, if I'm correct, 4.2 or 4.3, one or the other. I can't remember exactly, but we hit up to slightly higher, have come down and stayed down. So that's maybe what some investors were also fearful of. We knew jobs data ads were going to be a little soft. The question is unemployment rate going to rise? And it seems to be the case that it did not, and that would arguably be a more positive thing for the story, as we do still expect the Fed to cut rates. I don't think, Johnny, the reason there's not a wild reaction to this today is because it seems like the case for rate cuts, perhaps 2 more this year, is very much still intact, and it doesn't change the story all that much. And we see an economy that is cooling. We had GDP numbers come in soft, and I know we're going to also discuss for a moment the manufacturing PMI data that came out about an hour and a half later came in light. So manufacturing PMI came in at 46.5 compared to the forecasted 47.6. And I want to note for newer listeners, PMI numbers, the way they function is that when they are above 50, it's a sign of positive growth in the manufacturing department, the world category, and below that number is contraction in that part of the economy. So just as a highlight, so this was contraction, but it was more contraction than even was expected. So you had some soft data there. Clearly the jobs added data was not great. Average hourly earnings were up month over month, though they revised the previous month's data down a little bit. So that would be September's data. So bit of a mixed report, not a very clear. We've had some NFP reports in the last few months. Maybe investors were expecting something similar where the chart just shoots off in one direction, and throughout the rest of the day, it's pretty much up and away for the dollar, or down, down, and down. We didn't quite get that. Today was a bit more of a mixed reaction to the jobs data. And as you mentioned, Johnny, we're settling in here to a very, very interesting upcoming week. We have 2 ginormous events happening. Not only are they happening, but they're happening coincidentally back to back. We have the election next week, and then right the next day, or the next 2 days, I think it's Tuesday and Thursday, we have very close proximity, the FOMC rate decision. So This jobs data was one of two remaining really big numbers. The second one is something that we get next week, early in the week. We get the services PMI, which is, of course, not the manufacturing side. It is the services side, which has been a stronghold for the U.S. economy. The last number was very strong. So we'll see if we can repeat that. The question now becomes, does anything from here until the Fed decision change anything massively? Likely not. We take a look at the Fed Watch tool. It's about a 99% chance that we get a 25 basis point reduction on that November 7th meeting. So, we're counting down the days here, Johnny, to two major events. And of course, there's so much to talk about with that. I know we've talked about a couple times geopolitically on that front, what could happen following the election, right? With, waiting for elections to pass before perhaps some concepts in the Middle East, right? If you enjoyed this video from the Market Insights Market Pulse podcast, you can listen to the full episode by clicking the link down below in the description. You can find us on your favorite podcasting apps, and again, we post several times a week, so if you're looking for market updates throughout the week, this is the place to be. Whether you're in the car on the way to work or something like that, make sure to tune in to get the latest. Thank you very much for watching. We'll see you on the next one.